Joining us to talk about the market day, Peter Cecchini, Global Chief Market Strategist at Cantor Fitzgerald, and still with us, Charlie Bobrinskoy, Vice Chairman at Ariel Investments. But first, Mike Santoli, major averages closed near highs of the session. What does that tell you?
It tells you that there is just a very, very steady bid and a feedback loop that's working in favor of stocks right now. It's been a relentless rally, and every day it's as if there's somebody has a dashboard and it says, is volatility high or low? It's calm. OK, I can take more exposure. Credit markets, are they green or yellow or red? Very much green. We can take more risk. Buying the big, most durable cash flows in the market, like in the Nasdaq 100, that's the machine, and that's the way it's working. And I do think that there's still people are getting dragged out of a cautious position as we go through, because it hasn't felt comfortable to buy these highs coming into the year. But I do think the market is almost forcing a lot of people to do that.
Peter, reading through your notes, there are some factors that could get you significantly bullish from here. It's just you don't think that they're going to arrive imminently and that we'll see a bit of a pullback or even a significant pullback before they're likely to arrive.
Yes, I think. Look, I think investors are baking in almost a perfect scenario for U.S. equities, and the idea being that perhaps the business cycle is dead on extended monetary policy action. But when we look at earnings, as I've said many times on this program, really they were flat for 2019. In fact, the estimate as they come out for the last quarter here of last year is for down 2%. And we think that they're wildly bullish or excessive, actually, for 2020 at up about 8 or 9%. And we just don't think we're going to see that turn. And in fact, by FactSet data, revenues are really not slated to grow very much. And we're just not seeing an inflection in the growth statistics that so many other people are saying, whether we look at U.S. data or whether we look at overseas data. We just don't see it. And I would say lastly, and Rick Santelli mentioned it, look, the Bund is at minus 16 basis points. Financial conditions in Europe are actually tightening quite a bit. They're not loosening. So this narrative that financial conditions are actually loosening globally, we think is a false one.
Interesting. Charlie, I want to get your reaction to that. Do you agree?
Yeah, I mean, we would have to say that globally the economy is okay. There just aren't a lot of bad signs. We've talked about how important trade is. Trade is getting better, and that was a big bullet that we dodged. So I have to say there just is nothing in the short term to scare people. But in the long run, the market is a weighing machine. And in the long run, valuation matters. And so right now, we think there are value stocks that are attractive. Bonds are clearly not attractive on a valuation basis. But in the short run, anything can happen.
Is this phase one trade deal already priced into the market?
Oh, absolutely. Absolutely. And I think, frankly, there's probably a little bit of a sense that there'll be a second part of this. This is just step one, but it does help a number of things, in particular agriculture. Agriculture is going to do very well from this first phase.